In this presentation, we will complete a bank reconciliation for the second month of operations within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to do the bank reconciliation for the second month of operations. We entered the bank reconciliation for the first month, and there's certain challenges for the first month of operations that are unique to being the first month of operations. More specifically, I should say the first month that we enter data and reconcile the information for that bank statement within the QuickBooks file. In other words, we may have been in business before, started using QuickBooks at this point in time, and perform that first bank reconciliation within the QuickBooks system. That has certain challenges. Now the second month and going forward should be different, shouldn't have the same challenges. It should be easier for the most part, but as we enter the second month of operations, we'll see how those uncleared items for the first month will then be cleared, hopefully, in the second month. We'll see the timing differences, so it's important to see 2 months of operations so that we can see those timing differences, pick up those problems for the first month, and see what the normal bank reconciliation would typically be for the months after that. To do this, we're going to go to the Accounting tab at the bottom. Then we want to be in the Reconcile tab as opposed to the Chart of Account tab up at the top. We're going to reconcile in this screen. This is going to be our starting screen. In order to reconcile as we did with the first month, we're going to take the second month bank statement. Here's our mock bank statement for the second month. We have our same kind of information. Note that the beginning balance for the second month will, of course, enter or equal the ending balance for the first month. That's a key point, seems obvious. Key point, however, has to be the case once we've reconciled one time. In other words, the second bank reconciliation will have to work. We won't have, in other words, that beginning balance problem. If there is a beginning balance problem, it's not tying out, we're going to have to at some point fix that problem. Once fixed, then it will roll forward each time to be correct. Then we'll have the additions, the subtractions, ending balance for February. It should be February 28th, not the 31st, so we'll change that. And then we've got the detail of the deposits, the detail of the draws, checks, or if there were electronic transfers of some kind, same thing, and that's what we'll do. We're going to check off the information from the bank statement to our books. We will find everything on the bank statement on our books. If it's not on our books in QuickBooks, but on the bank statement, we will add it, because that's what we have to do. If it's on our books, however, not on the bank statement, then it's hopefully just an outstanding item. So we're always going to be comparing the bank statement to our books, looking to find everything on the bank statement on our books, not to find everything on our books to the bank statement. Seems like a subtle difference, but it does make a difference. So we're on the 109,415. That's our beginning balance that we just saw. Ending balance, if we look at our bank statement, is going to be that 99,296. So we'll enter that. Maybe I can even copy it. Can't copy it. We'll go back over here and just enter that and say 99,296.09, I believe it was. Let's just double check. Yep, that looks good. The date is going to be 02/28/19, the end of February. Remember, we have to have that standard cutoff, that cutoff bank statement date. That's what you want. You want the bank statement, not just the running balance of the accounts. You want the bank statement because it has that defined cutoff, has a defined beginning balance, a defined ending balance. We need those items. Not going to enter anything to the service charges or interest earned, because I like to enter those directly into the register so they don't confuse me. They might not confuse you, but they can confuse me sometimes if I don't see them in there to check off. So I'm going to keep it as is and start the reconciliation. So up top we have the beginning balance, the ending balance, the difference between those two, 10,118.91. That's what we're looking for. So we have the beginning balance, the ending balance on the bank statement. The difference, the 109,415 minus the 99,296.09, is the 10,118. In other words, it's the difference being the 24,149.41 checks minus the deposits, 14,030.5. So that difference then is what we're going to look for. We're going to look for this difference, check them all off. Once we found them all, we'll be able to reconcile. The system then, QuickBooks, can do the reconciliation for us. This beginning balance, we already found it. I'm just going to say we found that. Now we need to find the additions and subtractions. We'll start with the additions, not by entering this number directly, but by going to the additions on the bank statement. Here they are. We're going to find those in QuickBooks. So we'll go back over here. I'm going to check off the deposits. Looking for those first, it's usually easier to find the deposits than the checks because there's not as many of them, or at least it'll be easier in that there's fewer of them. So here's the 955.50. All we have is the amount and not the date. Doesn't really help us too much, although it should be around that date because the deposits should be pretty close, but it'll be around 3 days or something. And also remember that the grouping is important. It may be grouped differently if we didn't group them in the same format. If we entered the grouping of the checks or the deposits in our system different, we're going to have to figure that out. How are we going to, we'll have to figure out to group things together. So hopefully our goal is to not have to figure that out by grouping them in the same format. So here's the 955. Let's go back. We're going to say now we want the 12,250. So here's the 12,250. That looks good. We're going to say that has cleared. And then the 825 and the 825. Something to note that this 955.50 was written in our system in January. Meaning when we had the bank reconciliation for January, that was hanging out there in January and we didn't check it off because it didn't clear yet. Now it's clearing in February. That's what we expect to happen. If we had something hanging out here that we still didn't check off, say this one was there from December or something like that, that would be a problem. Or if it's there, and we're still not checking it off because it still didn't clear the bank. Well, then of course, that's something we would want to look into, double check, see what happened. So we don't have this item. This item's on our statement, not on the bank statement. This is on our books, QuickBooks, not on the bank statement. And that's okay because that just means that it hasn't cleared the bank statement. We can check that. We can call the bank, double check, and see if it cleared in the following month as it should, March. Now this you think it would have cleared. It's the 26, 27, 28. It's pretty close. So it should only take a few days if we deposited it on that date. So, but again, we could check it. We can call the bank and just double check that it cleared in the next month. And if it did, great, just a timing difference, no problem. Now we're going to go back over here and we're going to say we found that one. And then we'll check the checks. On the checks, it's the same if it was a check or if it was an electronic transfer. If you have a lot of things that are just electronic transfers, you don't have a check number, in other words, that's okay. We can check the date. The amount, and you might have other information that could help. In this case, we would have the canceled check that would tell us who we paid it to. That could help with the data. The date helps too, but not as much as it would for the deposits. On the deposits, the date should be pretty close. But over here, the date could be pretty far off depending on who we're dealing with, because it takes a while to clear the check. So if it's an electronic transfer, however, the date should be pretty close, which is nice. So that could be helpful as well. Okay, so we're going to go back and we're going to check these off. We have the 11,000 check 1006. So I'm going to go to payments. Here's 1006, 11,000. I'm going to check that off. We found that. Say, all right, that's done. We got the 500, 1007, 1007, 500. That looks good. We're going to go back over here and check that off or make it green. 360, 1009. So there's 1009, 360. Note the check numbers will not always go in order because it depends on when they deposited it. And the bank may have a different order in terms of, how are they ordering their information? Is it by check number or is it by date? So you want to basically order your information as similar to the bank as possible. That makes your reconciliation easier to do and it'll be all lined up as it is here. So then we'll go back over and we'll say, here's the 360. Did we check that off? We did. It started rambling. There's the 3539, 1011. 3539 is the 1011. Looks good. We'll check that off or highlight it and make it green. 1012, 630, 1012, 630. Looks good. I'm going to scroll down over here. We found that one. So notice it's a tedious process, but not difficult process. 1013, 1359. Notice what's happening to the difference up here. It's changing. It doesn't tell us anything until it gets to 0 because the change really doesn't mean anything because one check or one deposit could throw it off the other way. But we want it to get to 0. So if it goes up, don't let that discourage you. It doesn't mean you're going the wrong way or doing something wrong. 1015, we're going to say this item, 1015, that's that one, obviously. And so we'll check that off. So then we got 1014, 1359, 1359, looks good. Got that one. Next item, 1016. On 1016, 123.37. That's that one. Next item, 1017, 830. 1017, 830. Looks good. Almost there. And then we've got the, let's do two at a time here. 1020, 1023, 648, 3512. 648, we got to skip. This wasn't the time to do two. 648, 3512. Whew, that was difficult. All right, so then we skipped all these, and that's okay. That's why we're going from the bank statement to the books, because we expect things to be on the books, not on the bank statement. We don't expect things to be on the bank statement and not on the books, and if they are, then we're probably going to have to add them to the books, as we'll do with these two items. So we should be off now by 120 if everything's going right. We're off by 120. It has to work that way, because look at what we've done now. We've said, okay, we found that, and then we found all these, and so that number has to check off. And then we found all these except for these two. So that number is just off by the 120, and that has to add up to our ending balance. So it has to work. It's just a little puzzle. So now we're going to say, all right, the 120, we got to add those. We're going to do the same thing as we did last time. I like to go directly to the register to do that. So we're going to go to the accounting. We're going to go to the check register. We're going to go to the chart of accounts, and we'll open up the checking account register, and we're just going to add these two accounts. These are in the bank statement. We can't change it. It is what it is. We have to add them. So we'll go back over here and say, all right, let's add an expense. This is going to be as of 02/28/19. And the first one I'm just going to say is a draw. So draw. So we took out $100. Of course, the question is, if it's a cash draw, what was it for? And it's like, I don't know what it's for. And if this is the case, if we took money out of the checking account, we don't know what it's for. The question is it a business related or is it not business related? If it is business related, we should assign it to some type of expense, possibly miscellaneous, if we don't know where it should go. If we know we took it out for personal use, then we should put it into some equity account. And if it is business related, by the way, of course, we should be tracking it. We should have a receipt or something like that and whatnot. But if it's personal related, then we want to make sure to not put it into an expense. We shouldn't. We should be putting it into some type of equity. That's what we'll do this time. We're going to say this was a personal expense, which we're going to put into owner's equity, some kind of draws account. So we're going to see here's an equity account called personal owner's pay and personal expenses. In other words, draws, money that we took out for our personal use, not for business use. Notice the key is it's an equity account. So that means it's not going to affect the income statement. Net income, revenue minus expenses, not affected. It's just going to be pulled out of the equity, the net value of the company, or the business. So we'll say there it is. Save that. The next item is that 15 that the bank took out again. So here's the 20 this time. They raised the price on us. So then we're going to say this one is going to be service charge. I'm just going to say $20. And you could put the bank, whatever our bank is. And it's going to be a service charge, or the bank. Let's say bank. Bank charges and fees. That's the one. That's the one. And that's going to increase the expense, bank charges and fees, and take it out of the bank. So we'll save that. And then we can go back to our reconciliation, back to accounting on the left, reconcile on the top. Scrolling back down, we want to resume the reconciliation. We want to be in the payments section. Scrolling down, we should find these two payments then, which is the 20 and the 100 we just input. There they are. We found those two now. I'm jumping back and forth a lot, sorry about that, but we found those two. And now the difference is 0. We get a little green check mark, which is nice because that means that we finished it correctly or something. So that looks good. So now we can reconcile. So we will reconcile by finishing now. And note, again, this isn't the reconciliation right here. This is the data that we input. Now QuickBooks is going to say, okay, we tied off all this stuff, all the stuff that has a check next to it means it's cleared the bank. Everything that doesn't means it hasn't cleared the bank and therefore is outstanding. We can take that and now generate the bank reconciliation report by saying finish now. We're going to say great, view the report. Again, we get this intimidating report. The point is, it's as of 2/28. That's the date of the reconciliation. It's a reconciliation report. It's more than a bank. It has more detail than a bank rec. Here's what we have: the beginning balance plus the checks, the deposits, and minus the checks and withdrawals, and then plus the deposits gives us the ending balance. Again, that's just from the bank statement. That's just this. So the point is the ending balance is 99,296 for the bank. There it is, 99,296. And we had on our books as of February, if we look at the balance sheet, 98,995. And this is the reconciling item. So this number minus this number is that number. These three numbers are the summary of the bank reconciliation. Everything else is not, is just more information. So these are really the numbers that we want. But this number, we need more detail. That 300, that's what we want more detail for. They give us a lot more detail for a lot of stuff. So the checks and payments that cleared, again, we already have that because that's kind of, that's this stuff. So that's cool. It cleared the bank. That's good. We checked that off. We're pretty confident of that because it cleared the bank. Deposits, we already have that information. Those are these deposits. They cleared the bank. We're pretty confident of that. What we really want to know are these items, the uncleared checks and the uncleared deposits. That's the difference we want. So we're going to say, all right, that adds up to 1941.8 minus the 1641.27 or 300.53. That's the detail of that 300.53. That's what we want. That's the information we're looking for. So if we go back down, then we're going to say that that is made up of these checks and they haven't cleared. What this means is we put them in the QuickBooks and they haven't cleared yet. That's what the difference is between our balance and the bank balance as of this point in time. Why haven't they cleared? Well, it takes time for the checks to clear. So hopefully these are just outstanding and they'll clear later, or maybe they won't. Maybe that'll be good, but we think they're going to clear. We wrote the check and we assume that these people will take those checks and deposit them and they'll clear at some future date. And when they do, the bank will then know about them, and that's when they'll clear the bank, and we'll clear them on the bank statement at that time, even though we wrote them in February. We'll clear them in March, in other words, probably, even though we wrote them in February. Same with this deposit down here. We wrote it in February. We expect it to clear in March. Now, if we have any questions about that, it's probably March right now if we were doing this in real time. So we can look at the bank and we could say, did this clear in March? Did these clear in March? If they did, great. That's exactly what we would expect. And we can say that our bank account then looks good. We know we've double checked it to the bank. We know exactly what the difference is. Therefore, we have confidence in the bank balance we are giving because it's double verified from an outside source, the bank. And we verified it by reconciling, by knowing exactly what that difference is and being able to explain that difference through seeing that it cleared the bank. So now we'll just print this thing out. We're going to go back up top. I'm going to use the Qt PDF printer to do this. Notice how this is an area where the Qt PDF printer is really nice because we don't have the same kind of options with other reports here. So if you use the Qt PDF printer, even if you don't have a save as a PDF option or something like that, that's okay because we could just print it as a PDF and say bank rec. It's going right where we want it in section 9. So that's where I'm going to put it. And this is going to be 02.28.19, and that's what we want, and save that report. For more accounting information and accounting courses, visit our website at accountinginstruction.info.